I had a great conversation with Ciaara Hoffmann. Ciarra has I'll say, great, inspiring story, but it didn't come from a positive place. She was a loan officer, and when the interest rates jumped so quickly in 2022, she found herself making only about 10% of what she was used to making. And during that time, that was a catalyst for her to leave her corporate job and to become a full-time real estate investor. It is a great story. I wish it came from a better place, but thank you so much for listening to the show today. I really appreciate it. If you have questions, please reach out to me directly, Charlie at hkigllc.com. Please leave a review on the podcast platform of your choice. Thank you. Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook. All right, welcome to another episode of Passive Investors Playbook. As always, I am the host, Charlie Hardage. Joining me today is Ciaara Hoffmann. She is the VP of Operations for One Vision Capital. One Vision Capital specializes in the acquisition and management of value-add multifamily properties in emerging markets. Ciarra and her team have almost 1,000 units. Prior to real estate syndications, she was an experienced mortgage loan officer and had her own online marketing business. She is the host of the podcast Commercial Real Estate Bosses, where they feature stories of successful commercial real estate investors and syndicators. Ciarra is based in California, and I'm so excited to talk to her today. Ciarra, thank you so much for being here. It's an honor to talk to you again. I was on your show, a few weeks ago, and so it's good to talk to you again.
Absolutely. I'm glad to be here. So thank you for having me on your show as well.
Yeah, absolutely. So want to start off with your story's a little different. You know, you were already in real estate, but in some capacity as a mortgage officer. But how did you get into that? Let's start there. How did you get into that side of it?
Yeah, absolutely. So I guess it really starts, about 9 years ago, I was really involved with, or I was getting very interested in real estate. I was reading books, and my dad, actually, he's the one who came up to me one day, and I don't know what happened. He saw an ad of something somewhere of this real estate seminar, and he ended up taking me there. And yeah, me and my husband, we started off kind of doing single family together. And the mortgage business really happened when I moved to California to be with him, because at the time I was living in Canada, he was in the US. And so when I moved down here, my first job in America was becoming a loan officer. And I went from being just, on the sales floor to eventually having my own team and being a manager in that company.
Very cool. So you got your start there. So you're from Canada. You moved from Canada to California, and I know you're still in California. Where was that conference or that seminar?
So it was actually in Seattle. So I live in Vancouver, and it's pretty close by. We couldn't make the one that was local because of the timing. So we ended up doing the 3-day seminar in Seattle because it was pretty close by for us. We had family in Seattle, so we stayed with them.
Was your husband already investing in single family at the time?
He was, yeah. He's
Okay.
been more involved in the single family space. I kind of helped him to up level things when I moved here because I knew, like, coming from Canada, there's very little opportunity to get into the real estate business on the investing side. It's just not the same there. There's not as many people and transactions. And so I knew that California and just the US in general, there was a lot more opportunity. So when I came into the US, I got him and I joined a mentorship program on the single family side here in California and really learned more about, wholesaling, flipping. And so we got a lot more serious about it at that time because, he had done it, but it was mostly like he bought his own house, and then would kind of flip that, but he lived in it. So it was very kind of a part-time thing. And then we got, more into it together when we did the business together.
Wow, that's so
Yeah.
cool. Okay, so you did you joined the mentorship group where you learned wholesale flip. He was doing a little bit, but really kind of the house hack or I guess accidental landlord in that you helped him up level that business by saying, "Hey, we can actually do this more of instead of just like a hobby. We can actually do this and do really
Mm-hmm.
well at it." Why did you go from maybe being a loan officer to a full-time investor? Because I know you're a full-time investor now. Where was that
Yes.
switch?
So, yeah, that's a great question. And really, it happened in 2022. I mean, you know what happened with interest rates
Yeah.
last year. It just it rose faster than any other period in history. So there was about a 4.88% increase in a period of 14 months, which is faster than previous recessions. Like, for example, in 2006, it did rise, 3.96%, but that was spread out over 2 years. So it was a slower increase. And so basically, it seemed like overnight, as a mortgage lender, we get paid commission. And so we went from making, multiple six figures, closing loans, to our paychecks were cut basically by 90% in a pretty short period of time.
Wow.
Because a lot of my business was refinances. And so through 2020 to 2021, those 2 years, we were making a lot of money. Everyone was refinancing and I was giving out, 1.99%, 2.25%, just like it was like everyone was like, calling me. And so it was a different market back then. Right now it's like, well, no one's refinancing because what are they going to get rid of their 2% interest rate for? There's no point. Right. So um, at that point, I kind of was able to let go of those golden handcuffs, so to speak. So I wasn't tied to that W-2 commission income anymore. And I thought, okay, I can really start to focus more on the real estate because I had been at this point. So this is now 2022, we actually joined a multifamily mentorship program. And so I was still at my W-2 and I joined that. But as soon as, things started to change in that business, I said, okay, well, I might as well just go full time into multifamily and do things that way.
Yeah. Wow. I 90% decrease within probably only a few months because I know some for a little bit there was talk and I don't know if I think a country or two in Europe talked about doing negative interest rates. I think that was during COVID. But interest rates were in the ones like you mentioned for a long time and I thought we had it good. We have a low 3 interest rate and I was like, oh,
Mm-hmm.
this is great. But then they even got lower.
Yeah.
And then within, I think you said 14 months, Ciarra, interest rates went up over 400 basis points, over 4%,
Yeah.
which is insane. They're still up, and they may go up another time, but yeah, wow. So it seems like that was just kind of like a perfect time to get rid of those golden handcuffs and say, all right, I wanted to do this anyway. There's not going to be a better time than right now. And I love that.
Mm-hmm.
So I think you said last year you and your husband joined a multifamily mentorship group.
Yeah, that's right. So what happened was I've actually been interested in commercial real estate for a very long time. My husband said like when he first met me, I was talking about commercial real estate. And I don't remember doing that, but I'm like, okay, well, you're probably right because I've been thinking about this, since college. I can remember myself like looking at apartment buildings and thinking I'm going to own one of those one day, and so it was last year because I had made, pretty good money as a loan officer and a sales manager at that company, that I had saved up enough that I knew how much these mentorships cost. They're very expensive. And so I told my husband, hey, like I want to do that this year. Like I don't want to wait anymore. Like this is the year that I'm going to get into commercial real estate. And he said, okay, well, let me call my friend. Um, and he actually knows a lot of people in the industry that do commercial. So he called, one of his friends. His name's Tyler Devereaux, and we joined his mentorship program because my husband's known him for about 18 years, and
Oh,
so he
wow.
really trusts him. He's seen him go from the single family space into multifamily, and how we blew up, within 5 years, how he grew his portfolio so quickly, and so and he really trusts all the owners of that company and has known them all for a long time. And that's why we chose to do the mentorship with them.
That's amazing. So in college, you said, I'm going to buy an apartment complex one day. I think in
Yeah.
college, I said, oh man, that would be nice, but I could never do it. And so I love, we had pretty much the opposite thoughts in college and around that time. So are you still, do you guys still do single family?
No, we're not doing any single family anymore. We got out of that primarily because, especially here in California where we live, we were doing some flips here, and it just got really expensive because, number one, contractors would, be gone for weeks at a time. They'd go find another job to do. And so we would have, a vacant property that no one was working on for all these weeks. And the carrying costs in California are extremely high. Right. And then so it just wasn't making sense, even though we were still profitable on these projects. We were just, we weren't making as much money as we could have been. And it just didn't make any sense. I did not really get into the buy and holds, but my husband did a lot, buy and holds prior to marrying me, and that, again, that wasn't appealing just because you don't really make a lot. You make a couple $100 a month, and then as soon as there's a repair needed, something breaks, like air conditioner, or the HVAC system needs replacement, and all of your profit for that year is gone, right? Or if it's vacant even for like a month that year, just there's just a lot that happens that can basically, it's like owning a job, and we weren't about that. We really our ultimate goal is to be able to travel and do our own thing. And so we didn't really want to have a job that we owned, which to me, that's what single family was.
Yeah, I love that. And I have a very similar story. We had a few single family homes, and it's interesting because, and you said it, I mean, we're making a couple hundred a month on those, and but it was a job, right? And for one of those, if I didn't manage it myself, it wasn't going to be profitable. So I'm spending not a ton of time, which thank God we had great tenants, but the benefit of single family, if you buy it right, when you sell it, you get a nice check at the closing table, but there's not a lot of cash flow, and you're doing a lot of work basically
Mhm.
to get paid later, right? That's the way
Right.
I saw it. And so that's one of the reasons I moved to multifamily as well, because there's cash flow.
Mhm.
So you're not doing the single family now, because that you and your husband saw that as basically a business that you guys owned, but you're working in the business, and so that took some time and didn't
Yeah.
allow you to travel and do some things that you wanted to. Um, why you were so successful? I know, unfortunately the interest rate shot up, and you kind of said, okay, now I want to do, I don't want to work anymore. It's the perfect time to invest. But
Mhm.
why real estate? Like what makes real estate so attractive to you?
Yeah, no, that's a great question. I think for me, I've always preferred hard assets. I've invested in stocks, I've invested in crypto, and those things, you can make money, but you can also lose a lot of money very quickly, right? It's very volatile, and especially crypto. But what I like about real estate is that I have a lot more control of the asset, and it doesn't fluctuate, as much as stocks or cryptocurrency does. People always need a place to live. And it's very unlikely that I would just lose my entire portfolio overnight when I have real estate, because people are still paying their rents. And so it doesn't fluctuate so extremely.
Yeah, I love that. I love the fact that it's not volatile. I love that. I love that there's a lot of control in this. And something that you said, unfortunately, I know a lot of people have, and I'm not in crypto. I'm no expert by any means, but I know some people would wake up and their money would be gone. Either it was hacked or the company went under, right? Last year, I think I don't remember the company, but there was some issues with a really large company where I think the founder stole money or something like that. I don't know. But in real estate, the asset's still there. The asset's not going anywhere, right? And
Yeah.
you still have it. People are paying rent. You have insurance on it and things like that. So it just provides so much more safety. Going back to control, I love that because in stocks or crypto, there's nothing you can do to improve that stock or that crypto price, or
Hmm.
increase it or decrease it. But in real estate, you can do a lot, right? And so love those a lot. And then you also said something, um, you know, shelter, right? What
Yeah.
we invest in, what we buy, provides shelter, which is a basic human need. So everyone needs some place to live, and if we can make money on that at the same time, great. But people need to live somewhere.
Yeah,
Um,
exactly.
so how I know you said you did well as a loan officer. How can you talk about how you came up with some of the capital for some of these investments? I know you're in almost 1,000 units or so, and love to just kind of understand how you came up with the capital.
Yeah, no, absolutely. So, I mean, for our multifamily portfolio right now, obviously a lot of the capital was raised, right, through private investors. And so we do, capital raises basically, where friends and family, they pool money together, people that I meet at my meetup or other places, right? So people can bring as little as 50,000 to 100,000 or more, whatever they want to put into the deal. And we basically just kind of pool our capital together. And so that's how we've done it on the multifamily syndication side. Now I am also a passive investor as well. So I also took my old employer 401k that I had with the mortgage company, and I transferred that over into my own self-directed account or a solo 401k. So now I can actually take those funds that used to be in the stock market, and now putting that into real estate multifamily syndications.
How when did you learn that you could do that? I remember when I learned it, and I was just my mind was blown. Do you remember? Was there like an aha moment, or was it just through talking to people that you knew you could do that?
And I think the first time I heard about it was at a meetup event. So I was at a meetup event a few years ago. And so I think it was a self-storage event. And he talked about how you can take your, 401k, roll it over. As long as you're not still working at that company, you can take that old account and transfer it and put it into a self-directed IRA.
Yeah, that's so cool. And I love that. And a lot of the big financial institutions, they don't allow that. They don't do that because they don't make money on it. But there are companies out there, and I'm sure you could name several that, and you're obviously using at least one to do that, but where it's a custodian. So you could take your old 401k because you're not at the company anymore, and you can roll that into a self-directed or a solo account, and you can say,
Mm-hmm.
yes, I want to invest in that deal.
Yeah,
Which is great because it's then, kind of going back to that control, you still have control, whereas when it's in the stock market, you don't have control of that. um,
exactly.
yeah, that's awesome. And in your investments, where people, passive investors are like, Ciarra, this sounds great. How do I invest with you? I don't have the cash. I'm assuming you guys accept the solo 401ks, self-directed accounts.
Absolutely. Yeah. So we can work with your custodian. I also, if anyone is interested, I have a connection with the IRA club, and they would give you for free the first year a 401k or a self-directed IRA account. And people can reach out to me if they're interested in that. But I've worked with them, and they're amazing as far as just having that, human contact. I like to be able to call someone and have a person answer and not a machine. And so that's why I chose to go with this company. And, they've been really great.
That's awesome. You said IRA club.
Yes.
Yeah, that's great. And what's interesting is, these companies that do this, they're not small companies, but they're small compared to the big, brokerages, big firms. But
Hmm.
you do get that personal connection. How long did that take you from the time you decided, yes, I want to do this, to the time you were able to invest? Was that a pretty quick transition?
Yeah, it didn't take too long. I mean, I think it was 5 to 10 business days,
Oh,
really.
wow.
The majority of the time is just waiting for, your old 401k to transfer the funds into the IRA account. And so that's the part where you're waiting. But once the money's in there, then you can go ahead and then move that into different asset classes that you choose.
Okay, very cool. And I know with self-directed accounts, you cannot invest in your own deals, but you can invest that in other people's deals.
Yes.
Do you have any regrets on doing that, or what are your thoughts about solo 401ks?
No, I don't have any regrets. I mean, I think it's a great way to diversify. You don't want to have all of your assets in just stocks, is my opinion. You want to be able to diversify into multiple different asset classes and, just based on how comfortable you feel. For me, I really feel a lot more comfortable with real estate than I do with stocks and crypto. I've actually lost quite a bit of money in crypto. So for me, it's like it's all about the real estate because I know that I can get a much higher return and it's a lot more secure. And I'm looking at, maybe an 18 to 20% average annual return compared to, maybe 5 to 8% in the stock markets. In some years, I'm down, 20%. So it just really fluctuates too much in the stock market for my liking.
Yeah, I feel you there. There's been some good years, but then there's been some bad years. This is gosh, probably '08 or so. I think my 401k lost 50%. I didn't have a ton of money in there, but at the same time, that was a
Yeah.
huge drop for me because I had worked so hard to put it in there
Hmm.
to turn around and be like, seriously, there's hardly anything in here. But yeah, so you don't get that volatility. Even in times like now when the interest rate is so much higher, we don't have to sell the properties, right? Which is what I love. And if we were forced to sell it now, then maybe they don't bring that return that we had initially projected, but we don't have to sell it, which is the beauty of real estate.
Hmm.
Um, so I know you are the VP of operations. What would you say that your company goals are over the next 12 months or so?
Yeah, I mean, our goal is to continue investing in apartment complexes. We are underwriting on a daily basis. It is getting a lot harder to find deals in this market, is what we're finding. A lot of people are experiencing the same thing, obviously, with the rates being as high as they are. Just not a lot of deals are penciling because sellers are not willing to go down in their prices. They're still stuck on, the prices in 2020, 2021 when they should have
Yeah.
sold, right? But they kind of they held on a little bit too long and now now we're just not able to come to an agreement on what we think the price is today. And so, we're constantly underwriting and our goal is to acquire, 3 to 4 apartment complexes per year. But I would say that we are currently expanding into self-storage as well. That is something that we're very interested in. Me and my husband have talked about getting into self-storage for a very long time. And I think the timing is right for it. Over half of self-storage facilities are actually owned by small operators. So a lot of these are self-managed, right? They're doing this as a job. Maybe they might even, a lot of these self-storage facilities have a live-in apartment where, the manager or like basically lives, right
Yeah.
above the self-storage facility. And a lot of these are baby boomers that are looking to retire soon and kind of get out of that business. So, we're here to kind of take those properties and turn them into more of a professional operation, right? And streamline things and bring it up to market value. And so
I,
that's really where we're heading right now.
yeah, I love that. I've seen those, apartment type or small homes attached to the office. And, first time I saw one, I was like, there's no way. But a lot of them do live there. A lot of, they're, like you said, they're small mom and pops, family lives there. They've owned it for a while. They don't have any intention of leaving now, but they are getting older. And I know, the cool thing too about what you and your husband do, from the multifamily side is the value add. So you go in there, run it
Mm-hmm.
more like a business, add value to the property, to the community, and in return, that brings nice returns to the investors. And self storage, it's a different. It's very similar. You don't necessarily go and add a playground or a pool or whatever, but there's a lot of things that you can do that kind of coincide with multifamily, right? Like, make
Yeah.
the property look nicer, put a gate on there if the gate's not working, or if there's no gate, things like that, security cameras. So that's an amazing asset class. I was interested in self storage about 10 or 12 years ago, but more of like, yeah, that'd be great. But again, kind of like the apartments, Ciarra, for me, it's like, oh, yeah, that'd be great, but I could never do that. But anyway, yeah, no, that's an amazing asset class. I know, like you said, a lot of those are owned by mom and pops. They're not ran terribly, but they're not ran well, and they could be run a lot
Mm-hmm.
better. So I think that's a
Yeah.
great asset class. Um, how do you think your previous profession as being a loan officer, because you were a loan officer for single family, um,
Correct.
how has that helped you become a better commercial real estate investor?
I think coming from the mortgage business, I definitely have some advantages because I understand a lot on the financing side of things. And so, as far as, the numbers go and things like that, I'm, pretty well versed on that side of things. However, I think the best thing that I have learned is really about marketing. I have a pretty good understanding of online marketing. And I think a lot of people in real estate, they didn't have that kind of background that in online marketing, I would say. So they're very much not usually into like technology and AI and all these things. And so I have been able to really leverage that skill set and been able to build really strong connections, whether it's with sponsors, with potential investors, and other like GPs that would be on my team. And so with that, I was able to also launch my podcast, which you mentioned, which is the Commercial Real Estate Bosses. I made a lot of great connections. That's how we met. Right. And so I was also able to create my team that way. So the reason why I was able to join my current team is because I had those skills in online marketing. And that's why I'm handling a lot of the marketing and investor relations and all of those technology side of things with my current team.
Okay, so I went onto your website earlier today, and I saw in the bottom right, there's a little video of you that popped up, and so I clicked on it, and I don't remember exactly what it said, something about being a accredited or not accredited investor, things like that. And I was like, that is so cool.
Yeah.
Most people are used to a chat box, but that was like a video box. I don't know if I've
Mm-hmm.
ever seen that before. And to take this a step further with marketing, real estate hasn't changed too much over, I don't know, last 100 years, right? Like you look
Mm-hmm.
at Zillow and Trulia and Redfin when those first came out, everyone's like, holy cow, this is amazing, because you can see, all they do is they take the listings from all these local multiple listing services and put them on one website, right? Which is cool. It's amazing, and I think that's why people liked it so much, but it was never around. So I think little things that where real estate can leverage technology can make a huge difference, because this industry is just so archaic, so slow moving. And so I think, you mentioned marketing, and that's how you joined your current team. That's such a huge skill that I feel like myself included, most syndicators don't have, or it's not very good. And so I love that you well, you and your team, but mainly you are using all these cool SaaS products that even someone that does similar things as you get amazed by, like that little pop-up video. So I think that's awesome. Um, and you mentioned team and kind of networking a little bit. I'd love to talk about that, because that, in single family, it was you and your husband,
Mm-hmm.
but you couldn't really afford to bring on other people, right? Because
Right.
it's not all, we already talked about, there's not a ton of cash flow on it and all that. So I want to talk about the team and networking and multifamily. How do you think that benefits you and your investors?
Well, number one, everyone gets to play in, the field that they thrive in, right? So, it's not good for one person to be everything, because not one person is good at everything, especially in commercial real estate where it's a lot more complex, right, than single family. And there's so many things, and you're dealing with multi-million-dollar purchases and other people's money. And so you really have to be very cautious and very careful of how you handle things. And so, on our team, we have a couple people that specialize in acquisitions. So their job is to just build broker relationships and, get those off-market properties sent to us. And then they then bring it up to the underwriting team. And so we have an underwriter that's on full-time, and that's all she does. And then when it goes from that process of underwriting, if it looks good, then it comes up to, me and my partner. And then we kind of take a look at it, make sure it's good before we sign off on it, and then bring on other people. We even bring on other teams. It's not just our team. We partner with other teams. So there's a lot of people involved, right, with the commercial real estate side of things, which I like because it allows us to leverage our time.
Yeah.
Which is my number one, like, most important asset is my time, right? That I mentioned how we want to travel and be able to do other things. And the only way to really make that feasible is to have a team in place that can divide the work so that we're not burnt out and, spending 60 to 80 hours like we used to be doing in our W-2.
Yeah, I love that you said play in the field where they thrive. I've never heard that before, but that's so true because I'm not organized whatsoever. And I would be the worst asset manager, right? I mean, I wouldn't, maybe not the worst, but I would not be a great asset manager. And so, and that's for the audience, that's kind of like a project manager at work. They're the ones that talk to the property management company weekly and daily sometimes, but they're the ones that are basically executing the business plan. So I love that you use that analogy, Ciarra, of play in the field where you thrive, because single family, it was you and your husband. I'm sure you guys were great at a lot of things and probably not so great at a few others, but now you get to focus on your strengths and other people, your weaknesses or other people's strengths. So I love
exactly. Yep.
All right. So I want to talk a little bit in the introduction. I talked about emerging markets. And this is a really fascinating topic to me because, and you don't have to divulge what markets you're looking at. I mean, you can, but what do you guys look for in emerging markets?
Yeah, absolutely. There's quite a few things that we look at. And one of those things, obviously, is population growth, right? Is the population increasing or decreasing? We definitely want to be in those areas where the population is growing, right? The other thing that we look at is the types of jobs, right? So we don't want to be so heavily in a market where, it's dependent on the oil industry, for example. If the majority of the jobs in an area are in oil, well, oil is very cyclical, right? So when oil goes down, people move out of that market because they need to go find jobs elsewhere, right? So we want to be in a diversified job market, and we want to be in a market where job growth is on the rise as well. So employment is very important. And then other than that, we also look at things like, rent growth and things like that. But for the most part, if a population has to be on the rise, we're looking at job growth, population growth for the most part.
Very cool. Yeah, I know diverse economies are huge because you don't want, and you mentioned oil and gas, but even if it's not oil and gas and it's something else, you still want something that is, if one economy or one of, something in that market crashes, you still want several others to be able to support the population and things like that. So that's extremely important. I know people that have bought in non-diverse economies. It was actually in oil and gas, and they said they would never do that again, only because they didn't lose money, but they didn't make money either. So very important that there's diverse economies and people are moving there, and jobs are moving there as well.
Mm-hmm.
So I want to go back a little bit. I know I jumped around, Ciarra, but I wanted to hit on the marketing because I know you're amazing at that, and then touch on the emerging markets a little bit. But want to go maybe back to you as a loan officer, because I had my real estate license back in the day, and I know a lot of people in real estate, like other agents, they're not necessarily investors, right? Like they sell the properties, but they don't invest in it.
Hmm.
And I don't think a lot of loan officers invest in multifamily either, right? So, what would you say to other professionals in your field that to maybe get them interested in investing in multifamily?
Yeah, no, that's a great question. So I would say that, a lot of, well, pretty much every mortgage professional, we get paid by commission, right? And so especially in California, the taxes you pay on commission income is extremely high, right? And so investing in real estate is a really great way to take advantage of things like depreciation and being able to offset some of that income tax that you're paying. So obviously, I'm not a tax advisor, so definitely consult with a CPA. But I would say the biggest thing that you can do when you're in a high income or a commission based position is just to offset some of that income tax with real estate.
Yeah, I love that. There's again, you're not a CPA, neither am I, but there's a ton of tax benefits, and then something else, especially kind of going back to your story, Ciarra, of I'm not laughing, more of a this sucks, but a 90% decrease in your commission. So when you invest,
Mm-hmm.
there's some streams of income coming in. And then, depending on your project timeline, whether that's 3 years, 5 years, 10 years, whatever that is, then there's, you guys sell or refinance a property, then there's a nice capital event there. That someone that kind of lives off only commission, or maybe is in even oil and gas where it's cyclical, people
Yeah.
have that steady stream of income and then have a nice windfall when the property sells or refinances. I love that. So I know we have a few minutes left, Ciarra. I want to ask you about a recent book that you have read or listened to that really stands out to you.
Yeah, no, actually, I pulled out this book because I knew this question was going to be coming, and I have this book on my shelf, which really, I think, a lot of people like Napoleon Hill's book, which is Think and Grow Rich. He actually has another book which I like even better, and I have it here in my hand. It's called How to Own Your Own Mind. I like this one. I feel that it's a lot easier of a read. Plus, it just has a lot more, has a different concepts that is not really covered in Think and Grow Rich, which it's crazy because this was written in 1941,
Yeah.
whereas the principles are still very applicable to what's happening in our world and our economy today. So obviously, just like the title says, it's about how your mind works, how to organize your thoughts, and to be able to use your mind to achieve the goals that you want. And so I really enjoy this book. I definitely recommend it.
Awesome. I have definitely heard of Napoleon Hill. I've read Think and Grow Rich. I have never heard of that book before, How to Own Your Own Mind. So thank you. That's
Yeah.
amazing. Um, what can people expect to see from you in your business over the next few years? I know you talked about self-storage a little bit, but is there anything else besides multifamily self-storage?
Yeah, I mean, on the personal side of things, I mentioned how, me and my husband love to travel. In 3 years from now, actually, my husband's kids, they turn 18, so we'll be moving out of California, and that's kind of the goal, to be able to just travel the world full time at that point and kind of live off of our real estate investments and our other assets. So we do have that kind of a time period to really get ourselves moving, and so that's why we're really getting into stuff like self storage. And things like that. And if anyone on the call is interested in that self storage space, I'd love to chat with them, because I would love to kind of either help you if you're trying to get into it, or if you're in that space, definitely collaborate on things.
That's amazing. Where do you want to travel? Do you have any places in particular, or is it just everywhere?
So I have multiple places. I've actually traveled quite a bit. I've been to 25 countries so far. A lot of those was just, actually in college. I traveled a lot on my own. Now I want to travel with my husband. So we have a long bucket list. One of my goals is to live in Europe for at least half a year and just kind of backpack around Europe. And one of the things that my husband and I also talked about is getting an RV and just living in an RV for a year and just going over the whole country, because my husband's actually been to 49 out of 50 states, but he did it for work. So he didn't really get to experience, the city as much when you're working. right? So our goal is to just kind of move around and then find a place where we want to settle down, because we're going to be moving out of California at that point, and so we don't want to stay in this state for much longer.
What state has he not been to?
Maine.
Really?
Yeah.
That's interesting. We went, so we have a camper, and we
Mhm.
went to Maine a couple years ago, and we're actually going back next year. Acadia is phenomenal. But I've never been to Alaska, but I've been to every other place. So
Oh, nice.
yeah, I highly recommend RVs or a camper.
Yeah.
But yeah, that's awesome. So cool. All right, and you mentioned a couple minutes ago before I was kind of asking about traveling, but if people want to reach out to you, want to talk to you, whether it's about multifamily, self-storage, or travel, or
Mhm.
just to learn more about your podcast, Ciarra, what's the best way to reach you?
Sure. Yeah. My social media handle is CRE Bosses, stands for Commercial Real Estate Bosses. So you can find me, I'm on Facebook, Instagram, all of those things. But Facebook is where I'm most active. So if you message me on Facebook, I'll be able to see it more quickly. I don't really check my LinkedIn or Instagram very often. So the fastest way to reach me on social media is going to be through Facebook. You can also go to our website, which is onevisioncapital.com. That's the number one. So it's not spelled out. It's just the number one and then visioncapital.com.
Cool. And I'll put that in the show notes as well. So Facebook is going to be the best way to reach you. You're on Instagram, LinkedIn, but not as active. And then the website is the number one, onevisioncapital.com. Ciarra, it's been so great talking to you again. Really appreciate you being here. Loved hearing your story, and not the fact that you had a large decrease, but the fact that you kind of took action on something you wanted to do anyway, and you were able to find the key to the golden handcuffs, and
Yeah,
you haven't slowed down. So I love that so much. Thank you so much for being here.
absolutely. Thank you for having me.
Thank you. Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.